I have 15 of my portfolio tied up in two stocks: NVIDIA and Apple. I know for some people that would be a large part of their portfolio for just two stocks. However, I feel like for my risk tolerance I'm okay with having these two companies that are both high quality with great balance sheets and great growth prospects. Does anyone else have large weightings of just a few stocks in their portfolios, and if so, what are they? Any thoughts on these two stocks in particular? By the way, I'm 33 and feel I have a decent risk tolerance, as I know that is always a factor. Any input is greatly appreciated. SPY has 10 of their assets in these two stocks. I was at 90 Apple at one point for 15 years. Did pretty well. Two stocks Apple MSFT also make up almost 15 of the SP 500. Going 100 SP 500 is a viable strategy and in the past few years has seen an outstanding performance. So I think you refine. I'm retired. Apple is 25 of my portfolio, and over 97 of its value is capital gains at this point. First bought in the 90s. Since it's in a taxable account, not much I can do. I also hold 25 in an SP 500 index fund. Portfolio overall is 80-20 equities and bonds cash. So you bought SPY? Concentration builds wealth, diversification preserves it. I bought Apple when Buffett did. It has outpaced all my other investments as far as growth and has ballooned to about 40 of my overall investments. I am late 30s and plan on holding it as long as Buffett does not. Sure what I am going to do when he passes. Edit typo. I'm about 50 in both Apple and NVDIA. I'm not worried too much. But I also bought at a low. 40 of my portfolio is NVDIA because I bought in 2016 and it just kept growing. I'm in a very similar boat, and am here unintentionally. Bought a good amount of NVDIA and Meta last year and in 2020. At the time they combined for maybe 6 to 8 of my portfolio, and now they are almost combined for 20. I'm 31 years old. I'm personally staying put for now, but I will take profit and diversify if they get to 25 or more. When looking at NVIDIA and Apple, they make up 10 of the S&P. I wouldn't be concerned in your position at 15. Also, what would you buy if you took profits? To me, it's clear that a bull market has emerged, and your growth names should be rewarded. 3/4 of my portfolio is in Tesla stock. I bought at $191 a share. You're more diversified than Warren Buffett. He has around 50 of Berkshire Hathaway in Apple. If you bought NVDA over $400 you might be in trouble. Honestly, 15 Apple is fine. SP 500 itself has 7 of it and it's just an incredible company. NVIDIA not so much. It's probably the most overpriced stock in recent history, more overpriced than Tesla was imho. Apple has been a huge part for my portfolio since I bought it in the 90s. It's impossible for it not to be. I keep diversifying but the stock keeps going up. Great stocks today. So was Pan Am and WorldCom at one time. Too much in two stocks in my opinion. Max of 5 per stock, and that makes a portfolio pretty volatile. I would add MA, KO, MKC, VZ and LEG or SWK. Lots of other good ones, but you might not get a 40 a year, up or down. Diversification is protection against ignorance. It makes little sense if you know what you are doing. Warren Buffett. I have been 50 Apple since 2016 lol. 20.07, smiley face. I'm about 32 of my total holdings in just Apple from when I did ESPP, not counting DRIP or holdings in SPY 401k IRA funds. Every time I think of selling to diversify more, it continues to do well, so I keep riding the wave. I have 15 of my portfolio in Apple and Microsoft. I don't lay awake at night worrying about those companies and I don't like selling my winners. If things begin to change for those companies I'll sell, but right now I don't see a reason to do that, nor do I think both have peaked in terms of stock price. Only 15? Lol, for my first like 8 years all of my investing went to MSFT. Panned out well, but that was lucky. Now I'm just voo and chill. I have over 25 in TSLA and Apple. Average cost, $55 and $22, respectively. It's there a wrong or right? Rules are made to be broken. Just have an exit strategy put in place. If these are your conviction stocks, let 'em ride. I have my entire portfolio in Apple. Over $1 million. It's whatever. I have 50 in Tesla from one account for few years now. Company shares are in a separate account. If you are okay with your risk tolerance, you are sharing this here. Why? I put 40% of my portfolio in Meta when it dipped below 90. A friend of mine put 100k in hundreds of stocks. He regretted it because in total he's only up 10. You'll make more money when you focus on only a couple of stocks. Playing with fire. Sentiment is good now, but valuation is absolutely garbage. Both of these stocks very overvalued. If I had to pick one stock to hold for the next 20 years, it would easily be NVDIA. Here's some input. You are taking an extraordinary amount of risk that is uncompensated. You claim to have decent risk tolerance, yet are in a position to lose a huge portion of your portfolio. More stocks, more companies to follow. Don't sell your winners. I sold off some NVIDIA profit taking. If it falls, I will buy more than I sold. Rookie numbers. I have over 50 in Tesla. I fully acknowledge that this is bad, but it has tripled my net worth. 2 of your largest positions make 15 of portfolio. You are diversified as hell. If you own that many different stocks, why don't you just buy $VOO at this point? You are not risk tolerant at all with this allocation. Warren Buffett has like 70 of his portfolio in Apple. NVIDIA is a clown stock. We're in an AI bubble right now. I hope you bought them at the lows as opposed to making this decision now. Anyway, there's way better risk reward out there than holding these still if you bought lower. If you have any capital losses that can absorb the gain, I'd toss them out and buy something else. I'm 30-30-30-10 in 4 stocks. I always make projections, likely scenarios, analysis of moat, improved margins etc. and go from there. Megatech expansion is being priced quite highly going by traditional metrics, but you have to decide if that seems realistic or not. I have a 100 in Amazon totaling around 60k. I would rather back a winner and go all in than spread my money about on companies that are all going to be around in the next 5-10 years. These are 2 of the most overvalued companies in the market right now. Apple is a 33 PE company with negative forward growth and no cash cushion, 1.7 of market cap currently. NVDIA is pure AI hype which, like all stock hype, is often unfounded. Could be worse. If you believe in them, why not? Like others said, some of the favored ETFs already have over 10 in those too. 35 of my portfolio is one company, 20 is in another. I'm strongly against diversification in principle because, as Warren Buffett put it, diversification is a hedge against ignorance. And as you Vegas Delay your attendees pointed out, 10 of SPY is Apple and NVIDIA. That said, I don't think NVIDIA's valuation is justified, but that's just me. Time to diversify. You've made a bundle of money. On paper, use some of it to spread out and turn it into real gains. Why? Don't buy at the top. Sadly, it need to pay the tax. NVIDIA just got pumped. Just cash in the gains and leave the bags to idiots that are buying in. NVIDIA is one of the most overvalued companies I can think of. It has a price to earnings of 220. Personally, I would sell because you have probably made some good profits already and this is more of a gamble rather than an investment. Cool story, bro. That's pretty risky with Apple's growth slowing, NVIDIA wildly overpriced and warning signs of a crash right and left. You seem happy, but you'd be better off with a different approach.